Hello students, welcome back to my YouTube channel RIEE Raghavendra Institute of Educational Excellence. Students, today we are going to work out problem number 43 from the exercise of cash flow statement. Let us first try to understand the problem and what accounts needs to be prepared according to the given adjustments, and then we'll prepare the cash flow statement. Now, let's get started. Given to us a balance sheet of Solar Power Limited as at 31st of March 2014 and 2013. So which means 2014 is our current year and 2013 will be the previous year. Now, in the balance sheet, the first category is equity and liability, shareholder funds, under that share capital. So here if you see, we have particulars, note number and the value for each item for the respective years. But look here, for share capital we don't have any note number. So we need not bother about it. Just compare the current year value and the previous year value. Current year value is 24 lakhs. The previous year value is 22 lakhs, which means it is clear that in the current year the value of shares have got increased, and if the share value gets increased, it is mainly due to issue of shares. So shares have been issued. Okay, so shares issued for what value? For rupees 2 lakhs. And where this has to be shown, this will appear in the financing activity. Okay, we'll take this to the financing activity. Right. Now come back to the next adjustment. The next item, reserves and surplus. So this is nothing but this will denote the net profit, the starting point for any problem. But you have a note number for reserves and surplus. So that means you are not supposed to consider the value given in the balance sheet. Instead, you have to go down to your notes to account and check it out what is given in reserves and surplus. Reserves and surplus balance in the statement of profit and loss. It is given like the previous year value was 4 lakh rupees, whereas the current year value is rupees 6 lakhs. That means the profit has increased by rupees 2 lakh. So current year net profit is rupees 2 lakhs. And where this to be taken, this will be your base. That means the starting point. Okay, this will be your starting point. Am I making it clear to you? And if you couldn't able to understand, please revert it back. Okay, fine. Now once again moving on to the balance sheet. Given here long term borrowings, and in this they have not mentioned whether it is a loan or is it a debenture. When the information is not clear, you can take this as loan taken. You can take this as it is a loan taken. Let's compare the value of previous year and current year. In the previous year it was rupees 3 lakh 40,000. In the current year it is an amount of rupees 4 lakh 80,000. This means you have taken loan. Okay, this is nothing but loan taken to the extent of rupees how much? Exactly 1 lakh 40,000. And where this should appear? This should appear in our financing activity. We have raised a loan. Okay, so we have completed the first segment, we have completed the second segment. Now come back to the third segment, current liabilities. Okay, you all remember very well that as per the format, we will arrive at a place where there will be profit, that is operating profit before working capital changes. And as you know the concept, if your current liability increases, it should be added, and if your current liability decreases, it should be subtracted. So in this concept, let's see what is given for trade payables. Trade payable was earlier 4 lakh 8,000, but now it is given as 3 lakh 58,000. You got the concept? Earlier it was 4 lakh 8,000, now it is 3 lakh 58,000. That means your trade payables has come down. So current liability decreases. So that means trade payables, how much is a value? Calculate and tell me the value. Okay. Yes. Calculate the value. That is 4 lakh 8,000 minus the value of rupees 3 lakh 58,000. Let's see who's giving the right answer. How much? Come again. 4 lakh 8,000 minus 3 lakh 58,000. It gives you a value of rupees 50,000. Exactly correct. So trade payable value gone down by rupees 50,000. And then come back to next item, short term provisions, right? Remember short term provisions. Okay, so short term provisions, in this you have got two category, that is current year value and the previous year value. Current year value is given as rupees 1 lakh, and previous year value is given as rupees 1 lakh 54,000, right? In this case, kindly reconfirm it whether do we have any adjustments with respect to short term provisions, either in notes to account or in the additional information. When I just cross verified in notes to account, there is nothing with respect to provision, short term provisions. Even in the additional information, I don't have anything with respect to short term provisions. So, if that be the case, short term provision is given in balance sheet, but the information is not given either in notes to account nor in our additional information. In that situation, the current year short term provisions will be added in operating activity, whereas the previous year provision will be subtracted in the operating activity, right? And now moving on to our next segment, which is nothing but non-current assets. So non-current assets are nothing but your fixed assets. Here they are categorized fixed assets into two: tangible, okay, where you have a note number 2. Just come back to note number 2. You could see here it is mentioned as tangible assets, missionary, okay. The value of the previous year was 20 lakhs, and the current year value is 25 lakhs and 40,000. Also you have got accumulated depreciation, where the value for the previous year was 3 lakhs and the value for the current year is 4 lakh. So when you have machinery followed by it you have accumulated depreciation, then ensure whether do we have any additional information with respect to the machinery, depreciation and sale proceeds. Yes, in the additional information it is mentioned very clearly that during the year a piece of machinery costing 48,000, that means the cost price The cost price is given as rupees 48,000. Okay, on which the accumulated depreciation was 30,000. Okay, so that means accumulated depreciation has mentioned as 32,000. That means the book value the book value is rupees 16,000, has got sold for rupees 12,000. So book value is mentioned as 16, but the selling price, okay, so selling price, if you could see, it is done for 12,000. So when compared this both, you can come to a conclusion that we are sold at a loss. We are done a loss. We are incurred a loss of rupees 4,000. And I hope you all remember that we have made you very clear when we need to prepare what type of accounts. Basically, there are four important accounts to be prepared, that is your fixed asset account, the investment account, provision for tax account, and your fixed asset as well as accumulated depreciation account. So here there is a necessity to prepare both the accounts, fixed asset account as well as accumulated depreciation account. Why? By preparing the fixed asset account, you come to know how much purchases has taken place during the year with respect to machinery, and by preparing the accumulated depreciation account, you'll come to know the amount of depreciation that is charged during the year. So for that purpose, we need to prepare both the accounts. Am I making it clear to you? Yes. And now I'll prepare and show you. Okay. So we have to do two ledger accounts, right? And next comes is your intangible asset. So here, if you see in this intangible asset, it is given note number 3. Okay, so 2,24,000 was the previous year value, and the current year value is 80,000 rupees. So scroll down here. Number 3 is given as goodwill. So 2,24,000 was the previous year value, and 80,000 is the current year value. So this nothing but goodwill has got written off. So we have to show the amount how much it got reduced. So it was 2,24,000 in the previous year, and the current year the amount is only 80,000, which means an amount of rupees 1,44,000 has gone down. So that means it has got written off. This we need to take it to the operating activity by preparing the respective format. And then comes your current assets. So this current assets also, you know what is the concept is. So the concept of current asset is, if your current asset increases, it should be minus, and if your current asset decreases, it should be added. So let's see which are the current assets has gone up and come down. It has mentioned current investments. Remember, when you have current investments appearing in your current assets, this should be taken to cash and cash equivalent. It should not be a part of your current asset. It should be taken to your cash and cash equivalent. Now comes to inventories. The value of inventory, earlier it was 2,42,000, now it is 2,58,000. That means the inventory value has gone up. So if current asset value gone up, then you need to subtract it. So in that category, we need to add inventory. What is the value of inventory? So that means from 2,42,000, if you subtract, sorry, from 2,58,000, okay, if you subtract the value of rupees 2,42,000, it will be an amount of rupees 16,000. So inventory value will be rupees 16,000. Next comes as trade receivables. From 2 lakh 86, it has become 3 lakh 40. So trade receivable has also gone up. So how much is the difference? 3 lakh 40,000 minus 2 lakh 86,000. So this will give you the amount. It comes to rupees 54,000. So trade receivables again right here. Trade receivables rupees 54,000. And then this cash and cash equivalent which we have it, this will be taken up separately to the D category, because A category will be cash flow from operating activity, B category will be cash flow from investing activity, and the C category will be cash flow from financing activity, and D category will be cash and cash equivalent, and the opening value will be rupees 7 lakh 50,000. Also we need to take this 3 lakh rupees of current investment. So this both will be taken up together. So which means A and D will be clubbed together. I hope I made you clear what needs to be done with respect to this particular problem. Now let's start preparing the necessary ledger accounts first. Ledger account is nothing but the working notes. Am I making clear to you all? Let's get started. So the ledger account, you have to prepare it for the solar power limited. First ledger account is going to be your missionary account. Okay, so first I'm going to prepare the fixed asset account. Okay, so here I'm going to prepare the missionary account. So please watch what I'm doing it. So first I'm preparing the missionary account ledger. Okay, so debit side and credit side. The opening balance will have to be shown on which side? Debit side. So opening balance is rupees 20 lakhs. So to balance brought down 20 lakhs. Right? Similarly, write down the closing balance also. So by balance carry down. Right? By balance C bar D. What is the closing balance? It is 25 lakhs and 40,000. 25 lakhs and 40,000. And it was given in the question that the missionary was sold for an amount of rupees how much? 12,000. So sale, as you all know very well, sales will come on this side. So by bank, you can write it within the bracket as sale. Sale value is 12,000. And then we have encountered a loss on sale, right? So that means by P&L, you can write it as loss value of rupees 4,000. And of course the accumulated depreciation, by accumulated depreciation, the value of accumulated depreciation was 32,000. Any doubt up to this stage? No. So we have brought almost everything which is required to be dropped in the missionary account. Now you have to total the credit side first. So when you add 25 lakhs plus 32,000 plus 4,000 plus 12,000, you will be getting a total value of rupees 25 lakhs and 88,000. Right? You'll get a total of rupees 25 lakhs and 88,000. But you have only 20 lakhs on the debit side. So the remaining will be the balancing figure. So which is nothing but 5 lakhs and 88,000. This is nothing but the purchases. So it will be recorded as to bank Within a bracket you can write as purchases, and then it's a balancing figure, right? So any doubt up to this stage? Okay, so to bank, okay, within a bracket you are writing it as purchases, and then make both the sides equal, 25 lakhs and 88,000. And now you have to prepare the accumulated depreciation account also. So I'm just preparing accumulated depreciation account quite below this. So debit side and credit side. You know very well that accumulated depreciation is nothing but provision for depreciation. So the opening balance should be on the credit, and the closing balance should be on the opposite side. So opening should be in the credit and closing should be in the debit. So first let me bring the accumulated depreciation value. So by balance brought down. So opening it was given as rupees 3 lakhs, right? Parallel you write the closing also. So to balance carry down, the closing value was 4 lakh rupees as given in the question. Now you have to bring this accumulated depreciation of rupees 32,000 to the accumulated depreciation account. So it will be brought in the way of to missionary. Okay. So this accumulated depreciation will appear on the debit side as to missionary 32,000. Okay, I'll make you to understand with the journal entry itself. See, if an account has to appear in missionary account credit side, then in journal it should have got debited. Am I right? So the entry will be in such a way like accumulated depreciation account would have got debited to missionary account. So 32,000 and 32,000. Okay. So this is the journal. So when I prepared the missionary account, I brought this depreciation, accumulated depreciation to the credit side. That is what it is mentioned here. Now, when I am going to showcase the accumulated depreciation account, I should take this missionary, which is in the credit to the debit of accumulated depreciation. So, like how I got here to missionary account 32,000. Now, I have done with everything. I have to close the account. So, what I should do? I should total it. This side comes 4 lakh 32,000, whereas this side also it should be as 4 lakh 32,000. So the balance 1 lakh 32,000 will be declared as the depreciation for the year. So which means it will be as by P and L. Okay, it should be as by P and L, and within a bracket you can write as so depreciation for current year. I hope until this you don't have any doubt. It's clear for everyone. Am I right? So kindly ensure that you don't have any doubt with respect to this problem until this stage. Am I making it clear to you? Fine. Now let's start preparing our cash flow statement. Okay. So it's a very easy problem, and at the same time it is quite interesting to work out because you have to follow the format. And this question was asked in the year 2015. Okay, so I'm just going to prepare the cash flow statement here. So let me write the heading. It is cash flow statement of company names given as Solar Power Limited, right? Cash flow statement of Solar Power Limited as per AS3 revised. Okay, so cash flow statement of Solar Power Limited. Okay, as at 31st of March. The year given in the question is 2014. Okay, as per AS3 revised. So write the heading, and then now you have to draw the format. So particulars, then you will write as details, and then write it as amount in terms of rupees. Now let's get started. The first you have to make it as A, that is you're first going to work out on operating activities. So it is as cash flow from operating activities. Okay, so under this the starting point is net profit. You know very well that we have already calculated the net profit for the year, which came to an amount of rupees 2 lakhs here. Okay, just I'm going to fix the value. So net profit is going to be as rupees 2 lakhs. Please let me know if you have any doubt. Okay, and now with this net profit I'm going to add the items. Initially there are four items to be added, but in this problem if you could see we don't have all the four items. The shortcut I made you to understand. Okay, so TIPP, you don't have transfer to gender reserve in this case, so leave out. Interim dividend you don't have, leave it. Proposed dividend you don't have, so leave it. So here you have provision for, okay, you have provision, right? So that you have to take into account. Okay, so short term provision for the current year has to be taken into account. So add, okay, short term provision for current year. The value of short term provision for the current year is rupees 1 lakh, right? It was given the question as 1 lakh. So take the value directly to the outer column. Now when you add these two value you'll get an amount of rupees 3 lakh. This 3 lakh is nothing but it will be named as net profit before tax and extraordinary item. Okay, so naming very important. Okay, so it is net profit before tax and extraordinary item is rupees 3 lakh. Remember, extraordinary items are those items like loss of goods by theft, fire, accidents, etc., or abnormal loss or abnormal profits, all comes under extraordinary item. Now, with this set, again we will be adding another four items which I informed you, like D, G, I, L. D for depreciation, right? So you have depreciation in this question, right? Depreciation for the year. How much was the depreciation for the year? We have already calculated in our working notes, right? By preparing your accumulated depreciation account, we have derived the depreciation for the year is 1,32,000. So this value you have to show them. Okay, so you are going to show the amount of rupees 1,32,000 in the inner column initially. Okay, next G for goodwill, right? So goodwill return off. Do we have goodwill written off? Yes, in this problem we have goodwill also written off, which we have seen it. That is mentioned as the third notes to account. So 1,44,000. Okay, the next is I. So interest expense. Do we have any interest expense? Let us check it up. I don't think so. We have any information with respect to the interest. right? Because percentage of interest is not mentioned for any of the borrowings. So you don't have any interest percentage, so that means you won't have any interest expenses. Okay, so you need not bother about the interest expenses, so that line will not be coming for us, right? The next one, yes, you have L is nothing but loss on sale of fixed asset. Do we have it? Yes, we have it. So loss on sale of machinery, we derived that 4,000 rupees was our loss, so that should also be brought into the records. Am I making it clear to you? So ensure that you are okay recording it properly. So now you don't have anything else apart from this. And then we had two items to less. What are they? One will be your interest income, and other will be profit on sale of your fixed assets or investment. Since we don't have any profits and we don't have any interest income, we can just close this by here. So when you add all these value, 1,32,000 plus 4,000 plus 1,44,000, that comes to an amount of rupees 2,80,000. Okay, so it is coming to an amount of rupees 2,80,000. When you add this 3 lakh and 2,80,000, this will give you a net amount of rupees 5,80,000. Any doubt up to this stage to anyone? Fine. This we need to name it. The amount of 5,80,000 should be named. How are we going to name this? This is nothing but operating profit before working capital changes. Okay, so it can be denoted as your operating profit before working capital changes. So the amount of operating profit before the working capital changes is nothing but rupees 5,80,000. Right? Now we have to follow that particular rule. What rule? Add, okay, increase in your current liability and decrease in your current asset. Now we can just cross verify once again whether do we have any of our current liability got increased. I don't think so. In this problem we had any current liability got increased. We can just take it up. We had the current liability, trade payable is getting decreased, so it should go for the less item. And even none of the current assets has gone down, it has gone up. So that means we will have only the second category, that is less, okay, category. We won't have the add category. So this will not find a place. Instead you should write it as less, decrease in your current liability and increase in your current asset. So first under this you are going to bring it trade payables, right? Because current liability you have got trade payable. Okay, so decrease in trade payable. Write down. Okay, decrease in trade payables. How much is the value you got decreased? 50,000 rupees. Next, you didn't have any other current liability getting decreased. You are going to switch over to your current asset. So two current assets got increased, inventory and trade receivable. So write it in such a way like increase in inventories, increase in your trade receivables. The value of inventory got increased to 16,000 rupees, and the value of your trade receivable has got increased by rupees 54,000. Am I right? So yeah, so 54,000. When you add all this, you will be getting an amount of rupees 1,20,000 but that should be subtracted. Okay, so 1 lakh 20,000, this I need to subtract it from the value of rupees 5 lakh 80,000. This will give me a net total of rupees 4 lakh and 60,000. So this gives me a positive figure. Okay, this gives me a positive figure 4 lakh 60,000. Am I making it clear to you? So 4 lakh 60,000 rupees will be the amount. This I am going to declare it as my net cash flow from operating activity. It is a net cash flow from operating activities. Okay, so that is A. Okay, so A category is got done. Now I got B and C to be completed. Right. So B, I'm going to write it here. It is cash flow from investing activity. Cash flow from investing activity. So under this, I could see that we have done a purchase or we have done a sale. We have done only sale of machinery, and also we have done purchase of machinery also. How come? Okay, let me just get back you to the machinery account. Here you could see that you have done the purchase of 5 lakh 88,000 and you have also done sales. So you need to bring that into the record, right? So sale of machine, you have to record it here, right? So sale of machine. How much is the sale of machine that has been done? It is done for 12,000, right? The sale value of the machine was 12,000, right? That you should record it in this. So record the value in the outer column. Since it's a proceeds, that is, it's a income, it should be in positive. And then purchase of machine, right? The next one is purchase. So purchase of machine. This comes to a value of rupees 5 lakh and 88,000 exactly. When you calculate this two, you will be getting an amount of rupees 5 lakh 76,000, which will be negative. That is the cash used in investing activity. Okay, so you will be getting a negative value of rupees 5 lakh and 76,000, right? This will be denoted as net cash used in. Okay, it should be declared as net cash used in investing activity. Okay, net cash used in investing activity. I don't think so you have any doubt until this stage. Okay, now we are going to the third stage, that is the C, which is nothing but you have to write down as cash flow from financing activity, right? So under this, we are going to bring out the borrowings what we have done and the shares what we have issued. There's only those two items, right? So issue of shares, we have issued shares to the extent of rupees 2 lakh. So write the amount to the inner column. At the same time, you have, okay, got a long term borrowings, so increase in long term borrowings, that is loan taken. Okay, so increase in long term borrowings. So how much is the value of increase in long term borrowings? 1 lakh and 40,000. When you add these two, you will be getting an amount. That amount is nothing but 3 lakh and 40,000, right? So add these two value, that gives you a net amount. So that is nothing but 3 lakh and 40,000. Okay, when you add this two, so that gives you 3 lakh 40,000, right? Okay, so that should be recorded in the outer column. Okay, it should be in the outer column, 3 lakh 40,000. So it is a positive right? It's a positive figure. So that means it is nothing but it is a net cash, okay, from in financing activity. Net cash flow from. Okay, we'll record this as net cash flow from financing activity, right? So the amount comes to a value of rupees 3 lakh 40,000. Okay, fine. Now you have to come to the last segment, that is segment number D, right? What is it? Cash and cash equivalent. So this you will be getting it by adding A plus B plus C. That means what is A plus B plus C? If you ask, it is nothing but the value what I have got it here. This is the final value of A, okay, and then followed by that I've got an amount of rupees 5,76,000 negative, which is my B, and the value of rupees 3,40,000, the value of C. So add these three value. Got the concept? Yes. When you add all these three, that is 4,60,000 plus the amount of, first let me take the positive figures together, 3,40,000. When I add these two, okay, I'll be getting an amount of rupees 8 lakhs. And now from this 8 lakh, if I take away this 5,76,000, okay, I'll be left over with, I'll be left over with what? This becomes as 7, 10, 9, 10, so 4, 2, I think, sorry, yeah, I'm sorry. There's a small mistake. I'm sorry. Add the values properly and check it out. When you add a value of rupees 4 lakh 60 and an amount of rupees 3 lakh 40, okay, yeah, you'll get finally an amount of rupees how much? Calculate it. Okay, yeah, so 4 lakh 60,000 rupees plus value of rupees 3 lakh 40,000 will give you 8 lakh, and then a negative of rupees 5 lakh 76,000. Okay, this will give me an amount of rupees how much? Okay, fine. Okay, so it's 3 lakh 6,000. Oh, okay, I made one mistake. I'm extremely sorry. I forgot to take the amount of your provision for tax, which is to be taken towards the last. Just hold on for a minute. Okay, hold on. Yes, so here 4 lakh 60 you got it, and with this I need to do one small calculation which I missed out. Kindly excuse it. Okay, yes. So with this 4 lakh 60, I should have to subtract. Okay, I'm sorry. 4 lakh 60. Okay, again I should less, okay, short term provisions, value of rupees 1,54,000. Okay, the value of rupees 1,54,000 I should subtract from this. So 1,54,000. So from 4,60,000, if I subtract the amount, that will give me the final value. Yes, that is an amount of rupees 3,06,000. Okay, so this is my A value. So when I club all these three values, I'll be getting an amount of rupees 70,000. Okay, I'll be getting an amount of rupees 70,000, and to this 70,000, now I should add my opening cash and cash equivalent. Okay, I have to add opening cash and cash equivalent. This is nothing but the value of rupees 7 lakh 50 plus 3 lakh rupees. Okay, so 7 lakh 50 plus 3 lakh. When I add these two, I'll get the total of rupees 10 lakh 50. So record the value of rupees 10 lakh 50 over here. Adding these two, that is 70,000 rupees plus 10 lakh 50, I'll be getting an amount of rupees 11 lakh 20,000, and this is my closing cash and cash equivalent, which means if you could see the question, the closing cash, which is mentioned as how much? Closing value of cash is mentioned as 6 lakhs 40 and there 4 lakh 80. Adding these two, we'll get the value. Okay, so add these two, you'll get that particular value. Okay, I hope it is clear to you, right? It is the clubbing of those two value, that is the value of 4 lakh 80 plus the value of rupees 6 lakhs 40, right? So this gives me the net total. By this the problem comes to the end. Thank you, students.